Hi, and welcome to 2023. And it's our first video on the major stories that have impacted the market so far. Now, obviously, we've only had a few days, but there are a few bits to talk about. I'd like to wish everybody a happy new year and wish you the best of luck for 2023. So what do we expect in the stock market for this year? Well, a new year always brings lots of talk about what may happen. And there are certain things which are, I think it's fair to say, still considered to be major drivers for pretty much all the markets around the globe at the moment. That's high inflation. We can't seem to get away from that. Potential recessions, more tightening policies from the central banks, and of course, the geopolitical situation. Now, Reuters has stated that investors hope the V-shaped pattern for the global economy will end with a comfortable increase in stock prices. Yeah, not too sure myself. There's an awful lot of factors out there that need to come to play. JP Morgan are predicting for 2023 that market turmoil and an economic downturn in the early part of the year will be quite severe, but more favourable second half of 2023 could lead to a bit of a respite for investors across the globe. Now, an interesting chart from Refinitiv suggests, and it is just a suggestion, that when the world PMI is below 50, this could be the bottom in the stock market. Now, if we were to believe this assertion in this chart, have we seen the low in 2022? If so, again, that could provide a little bit more confidence for investors. And if we look at the S&P futures chart, the level near 3,500 is 50% from the lows of 2018 to 2020 and the all-time high. Now, technical analysts would suggest that support could be expected at this price level. Again, lots of different assertions out there, lots of different thoughts. As I always say, whenever trading, risk management is the key. But I think it's fair to say we can expect a fairly volatile 2023. Okay, for our second story, we're going to take a look at the Great British Pound, as we seem to have done almost every week for I can't remember how long. But it was fair to say it was a bad first day for the Great British Pound this week. Now, Tuesday the 3rd was the first full working day in many Western markets, and what a day it was for sterling. Having finished 2022 strongly, rebounding from months of decline, it turned abruptly Tuesday morning. 7:30 a.m. UK time, it was trading about 1.21. Pretty good considering where we had been a few months before. But in just 2 hours, it fell to 1.19. That was its lowest point for 2 months, having spent November and December rising and recovering from the previous lows as far down as 1.08 in late September. And if we think back to that time, in fact, some analysts were even talking about parity and the pound losing its status as the most valuable currency in the world. Now, once again, it shows that volatility, which for almost 2 decades had been low in currencies, is again rampant. We've got inflation across global markets, major concerns over the UK's economic policies resurfacing. So I think volatility in sterling may well become the norm. We're going to come on to what happened yesterday in just a moment, but certainly not a great start to 2023 for sterling. So, Tuesday was a bad day for sterling. However, that US dollar rally seemed to be quite short-lived. So, Tuesday was a bad day for the pound. Wednesday showed that volatility works both ways and is still there, as the US dollar rally reversed quite suddenly. On Tuesday, we'd also seen the euro dollar sold off below 1.06, and many analysts were saying, well, investors were seeking security in the US dollar ahead of some quite major figures out later this week. However, Wednesday, it changed. Sterling moved back up to 1.21 from 1.19. Now, currently, we're looking at just over the 1.20 mark, so still jumping around quite a bit. And the euro recovered slightly as well, and in fact, was looking relatively steady, currently trading around the 1.061 mark. So, was there a sea change in terms of US dollar being security? I just think that volatility is well and truly still here. And of course, during volatile times, risk management is very much your friend. Keep your eyes on these currency markets. I think we're in for quite a few jumps and falls in the coming weeks. So finally, what else have we seen move in the first couple of trading days of this year? Well, it's fair to say that gold has started 2023 strongly. It's been a good few days for gold at the start of this year, with futures prices increased to almost the highs of the summer 2022. Now, many people saying it may be a result of portfolio balancing at the start of the year by institutional investors, and that the Fed minutes may have an impact over the next couple of days, along with other figures coming out. But what's the outlook for this year, according to many of the analysts? Now, obviously, the belief that the unfolding recession and geopolitical tensions this year may well increase the attractiveness of gold as a safe haven for 2023. And many analysts are predicting price increases, as we can see here. Now, looking at this, with spot gold currently around 1845, we can see that these predictions have one heck of a price range, from $1,550, which is lower than the current price, up to $4,000 per troy ounce. With such a range coming from the experts, as we like to call analysts, what do you think is going to happen to gold in 2023? Will it become that safe haven again? Well, only time's going to tell, but certainly an interesting market to keep your eyes on. Good luck with your trading the week ahead and for the rest of 2023. Bye for now.